Greetings traders, D7 here with freetradingvideos.com. Let's take a gander at the markets. We've got some activity. Markets down 2.7% the Dow, and NASDAQ down 1.5%, S&P down 2.3%, and the Russell's down quite a bit at 3.3%. Now here's the thing I want to pay special attention to. The VIX. Again, the VIX is the volatility index, or the fear indicator, many people call it. And that if you're down 2 to 3% here, you should have been up 2 to 3% here. It's showing that the VIX, there's not as much fear out there. I mean, we were barely in the green, 0.7%. 0.7% is all we were here on the VIX. And what that's saying is, yes, we did drop, but the fear's starting to subside. So keep a special watch on that. Again, you know that I'm looking for the VIX below 56.25. So I'd like to see that take place, and before I start to be thinking bullish. Now, I'm flat the markets. When I say flat the markets, all that means is that I'm holding all cash. I'm holding all cash. I'm waiting for decisive direction, either up or down, before I pull the trigger. I was in a rim trade. Here, let me show that to you. Let's blow this up so we can see it. And this was the rim trade. This is today, Monday, and here's Friday. And Friday, there were some things that I saw here that I entered the trade right here. And Monday, boom, we get a gap, and it started showing some weakness. I exited, so I pocketed the difference right there. And I'm glad to be out of this trade. You know, it dropped $1.64 today. But let's go back here to the NASDAQ, or I'm sorry, the S&P, so we can see how the markets are doing. Now, what you have here is what's called a bearish Harami reversal pattern. A bearish Harami reversal pattern. What this is saying is there's a high probability of a drop taking place tomorrow or Wednesday. And if that drop were to take place, we do have a little bit of support here on this blue line, and we'd like to find some support there. If not, and if it can break that, you know, and drop below this big blue line, this upper trend line that's slanting downward, we did pop through that on Friday, then Monday, and then today sideways. Now, this is what I'm expecting to see. Let's blow this up. Really nice. We popped and we ran, just like we said. When you break resistance, good things happen. But it was short-lived. Look at this. We have what's called an inside trading day. That means we have a lower high, higher low. Inside trading day. Now, this is what I expect to happen tomorrow. It could start to just go sideways. Now, technically speaking, it is bearish Harami. High probability of a drop. So if we make a lower low, we could get a nice red candle developed right here. But if we can stay here and just move sideways a day or two more, then this will build what's called a high base. You'd run up in a high base. Some people call them flying plateaus. Those are very bullish. The 50-day moving average will act as resistance, and then you should get a pop past that. And we did drop back below 900 here. So 900 could keep choppy around 900 before it makes its upward move. Now, let's make the assumption that the markets are still horribly bad and nobody has any confidence in the markets. And let me show you something that happens more regularly, especially in these markets, than what most people would like to see. They're called fake outs. Anytime you get a symmetrical triangle like we have here, you get a breakout. They usually last a day or two, and then you get a monster run to the downside. That is very possible here. I can't put a percentage on it because I'm not sure. But what that means is if we do get our lower low here, we don't find support here or here, that we just crash down, we should get a nice extended leg to the downside. Now count these up days that we've had here. 1, 2, 3, 4, 5, 6, 7, 8, 9 up days out of, and then just add 3 more. Out of the last 12 days, 9 were positive. Only 3 have been bearish. So we are due for some down movement. It has a lot of, see all these lines that I have here? These are all support areas. And if we do start a down leg, that could be a nasty little down leg we get. And we come up and we have this nasty little down leg right here. We come up and we could get another little nasty down leg here. These red lines here are crucial. Now you're going to see a lot of buyers coming in down here if we do come crashing down, and then that could make our double bottom if we run up, pull back, and then bounce. So what am I saying here? The only way that this thing should keep going bullish, that I'm going to give it any shot at all continuing to the bull side, is if we base. We need to base so we can pop. That would be bullish. Other than that, I have a sneaky suspicion here that there's a better chance of actually some downward movement, and if we do, it could get really hairy. I'm not going to be quick to pull the trigger to the short side. Again, I'm in cash. I'm not going to be so quick to pull it to the downside until we start busting through some of these support levels. If we can bust through some of these support levels and jump in on it on the drop, you can make some good money on that. But remember, things that drop fast tend to bounce fast, so you want to be watching it really closely. So there you have it for the markets. Looking forward to seeing people in the forums and chatting. We love all the comments. You guys are finally getting the hang of adding comments to our videos. We love them. We love reading each other's, and we love communicating back and forth. Thank you for those, and thank you for all the positive feedback that we're getting. And if you'd be so kind, do us a huge favor. And you guys are on a lot of different trading blogs. Please just let other traders know about us. I think that it's important that everybody knows about free trading videos. Yes, I'm biased, but I think we have a great thing going here, and I think there's a lot of value for a lot of people. And if there's developing traders out there, they need to know about us. So thank you so much, and until next time, happy trading and be safe out there in the markets.